allergies or something. I don't know. All right, you guys ready?
Yes, sir.
Yes.
Okay, here we go. Here we go. Hello, this is Brad Wiseman. You're listening to Real Estate and You. We are back here with Justin Perella from Contour Mortgage. It is going to be a great show. We are updating you on all the mortgage information that is going on right now. And it's a little ugly out there. Rates are going up, but I see some light at the end of the tunnel because I see inventory going up. So that's really good. Is that good? That's good. So, yeah, Justin is in the studio here. Let's get right into mortgages.
Hola, Brad.
So are you like the Grim Reaper right now because rates are going up?
No.
No,
because at the end of the day, we have no, the inventory is what drives it. I mean, my mood and my,
Gotcha.
how busy I am, obviously.
Okay,
So
that's true.
Listen, it is what it is. We don't control it. So if you want to buy a house,
that's right.
the rates are
The rates are the rates.
the rates are the rates.
And the reality is these are not high rates.
No, I mean, and again, we'll jump into it, but you're looking at 30-year 5.75 to 6, depending on your credit score. 15 years pretty good at 5.125 is 5 1/8, as we call it.
And
5.3.
And you know what's funny? Normally when you would look at the 15-year rate, I wanted to ask you this. And you look at the 15-year rate on a normal situation, the payment goes way up.
Yes.
In today's world, going from let's just say 3.25% now to 5, let's just say to 5.25, 5.375 for 15. That delta between what the 30-year was going to be at 3.5 based now going to 15-year.
Right.
Maybe you can save a little, maybe it's a little bit better.
It will be, and I can run those scenarios, but again, this whole thing comes down to when do we think the rates are going to go down again? So if I'm buying, I have to look at how long am I going to be in this 6%.
But that's a guess. That's an educated guess,
yes,
right?
Correct. Yes.
There's nobody has the crystal ball to look at that and go, okay, this is where rates are going. But you're saying some of the indicators, some of the experts, if you want to call them that, are saying that rates might go down next year or 2 years from now.
So I don't know how long you've been buying homes for 20 plus years, right? There's always been refis.
Yes.
It seems like it's obviously cyclical. Like, so the rates go up, they go down, they go up. So there's always going to be a time to refi.
Sure.
Is that going to be in 3 years, 2 years,
Who knows?
1 year? Who knows?
Well, anybody buying now, if the rate goes down to, if you buy at that real bad spot of 6.125 because your credit stinks right now.
Yeah.
Okay. And then later on, the rate goes down to
even a point,
or if it goes down even more than that, and now their credit's better,
they're going to do it.
They're going to do it. They're going to refi.
So that's why I don't think points or paying for a rate right now makes sense. I think you just, you get the best you can
for your credit.
For your credit,
right.
Maybe a little bit of money, and I'd say you do the math and figure out how long it's going to take you to pay that point or partial points off.
Right.
But don't throw a lot of money at it because, like you said, there's going to be a time kids going to college. You want to do a catch up refi. If they go down more than rule of thumb used to be 1%.
Right.
Now it's they think more half, three quarter, and it's all relative to your situation.
Absolutely.
Do you need the money?
Yeah.
So, excuse me. I think you're eventually gonna refi within 3 to 4 years.
Yeah. And sometimes you have to refi because of things you aren't thinking about, like divorce.
Yeah.
Estates, or not estates, but like a trust or something like that. Or
so if you're fighting with your wife, you don't want
wait till the rates go down to get divorced. Come on, people, be a little sensible. Could you imagine having that conversation? Well, we're not going to get divorced now. I can't stand you, but
Justin,
we're going to wait till the rates go down. So Justin said, give me 2 years.
Could happen.
Yeah, it could. Absolutely could happen. So, okay. So the rates they are what they are. Now, I had asked you when we talked about doing the show, what about adjustable rate mortgages?
Yeah.
ARMs, they used to call them ARMs.
No, they still do.
Yeah.
ARMs. Not really. Right now, I just priced them before I came, and almost all of the adjustable rate mortgages come with points.
Okay. So you're paying points and
so
you're not locking that rate for more than what? 7 years, 5 years?
I quoted a 5 and a 7.
Okay.
And a 5 was 5.625, so 5 5/8, and that was with a point.
Oh my God, that's not good at all.
No, because if you look at it, you could probably get a 30-year for 5.75
Yeah, that's a no-brainer.
at a half a point.
Forget that I ever even asked you that. Okay.
Well, no, but it's a good question because you're not the first person, and a lot of
Well,
clients ask.
well, that's the thing. As soon as rates go up, I always think adjustable
Yeah.
rates, because years
Most people
ago,
do.
when rates went up or when rates were higher, you always thought adjustable rate mortgage,
Mhm.
because you would say, okay, I know that the same thing before as the refis. I know that over the next 5 to 7 years, most likely the rate is going to come down to a place that I'm going to go, okay, now I'm going to refinance. Now I'm going to lock.
Or you're not going to be in that house.
Or you're not going to be in that house.
I mean, that's the other thing.
Or you get divorced again. And then you got even more problems because now you're spending money like you wouldn't believe.
That's awesome. So again, yes. So life-changing events. You're not gonna,
Yes.
so don't pay points in arms. You don't know how long so you've got to ask yourself, is this a 5-year house? Is this a 7-year house? And you might not know, but if it's your first house, you're talking about what, 4 to 7 years?
Yeah, I would say that. And actually, what's funny is as you look at the stats, and people are moving sooner. Years ago, it used to be 7 to 10 years.
Okay.
With the increase in homes over the last 3 to 4 years, we're seeing people move in 2 years, 3 years.
Yeah.
They're grabbing the cash and going somewhere else.
Yeah, especially in this market.
Yeah, exactly. So that's so the arms are out.
Yeah.
Arms are out.
Arms are out. Don't pay points.
Don't pay points.
Well, extraordinary points.
Right.
Like I wouldn't throw anything more than a 1%, 1 point.
And when we say that, that's 1% of the mortgage amount,
Correct.
not the house, not the actual price of the house.
Correct.
Okay. Just
And there's
making sure.
partial points. So you might be able to spend $500. The house is $100,000. Obviously, 1 point would be 1,000. Half a point might get you an eighth of a point. So there's
right.
partial points.
Okay. Sounds good. So where are we at? You had made a big deal about the HELOCs before we went live.
Yeah, only because people that need money for
now let's talk about. We always throw on the word HELOC. It's home equity line of credit, right?
Home
or
equity.
HELOC, which is a secure or serious home equity line of credit.
We just want to be,
want to be very politically correct. So
Correct.
there's a HELOC and a HELOC.
Home equity lines of credit. So a lot of my clients ask me, there's stuff that I need to do to the house. Should I do a HELOC or should I wait and then do a cash out refi? So always a HELOC in this environment, in my opinion.
And they allow you up to what percentage?
Well, all banks are different. I've seen 95.
Whoa.
So again, if the house is 100,000, your total debt on that house can be 95,000. Whereas,
so if you loan for 80 already, you're at 15 grand. You're 15 grand. You're pulling out.
But you're not paying mortgage insurance on that 15.
This is true.
That's why it makes sense, because you're still, quote unquote, able to write that interest off because it's underneath your home, but you're not paying mortgage insurance on that 80 to 90.
Well, 95. I remember a time when you could do that 80, 15, 5
yes.
or 80, 10, 10.
I used to do it all the time. 80, 10, 10.
Yeah. And that was basically to save on the mortgage insurance.
Correct. You can still do it. I don't know why they don't do it much anymore.
I don't know either. I think what happened is the second lien position during 2007 didn't get paid.
Yeah.
You know what I'm saying? Like they were the first ones to not get paid because of default. So the HELOCs are good. It's a good idea, and grab some money out of there, especially right now. I mean, if you have anything you want to do with that house, grab some of that money out and use the money that you have into your home.
Correct. And then consolidate when the rates are going down.
Sounds good. Yeah, it sounds good. Okay, what else we got here? Construction loans.
Well, they're on. I just wanted to let everybody know that they're not a thing of past. We do.
They're out there.
Them. Yeah, they're out there, and we're doing them. It's just the cost of, the cost of lumber is outrageous. But we need builders. We need those, those guys and gals out there building homes. So,
we need to add to our inventory. That's
correct.
The big thing,
So we'll help finance that. So if anybody's
that's actually doing the draw and everything. Like you do a draw and everything on that. Okay.
Correct.
That's the old school way.
It is.
Yeah.
Well, because some builders will finance it now on their own. And, obviously the end user, the buyer likes that.
Because turnkey.
Yeah.
It's not all the other
but
stuff.
not all of them offer it. So if you need, or you found land, let's say you bought land on your own, you're not going to get a builder to finance that. But definitely we do them.
Awesome.
Excuse me.
So it sounds like we both have frogs in our throat. I don't know what's going on here. Something going on in the air or whatever. I don't know. So how to win an offer? You had said this to me before, and write a good letter. There are a lot of people doing the letters yet that it does work sometimes. Sometimes it doesn't. Sometimes agents, unfortunately, don't even show them to their client. And we have different thoughts on that because we're supposed to present all offers to the seller, both written and verbal. But there's nothing that the state says about personal letters, because really the letter has nothing to do, as in my opinion, has nothing to do with the actual numbers and the actual official agreement of sale. In my mind, I think you need to show it.
Yeah.
And I'll tell you why. If I'm at settlement and regardless of the letter, that the buyer that won it, I'm sitting there with the seller and the buyer says, "Hey, was it the letter that did it?"
And they say, well,
And they go, "What letter?"
Yeah.
Okay, that doesn't go well. It's not a good conversation. It's not a good way to end settlement or end a relationship. So, in my opinion, if the buyer gives me something, or the buyer's agent gives me something that was meant to go to the seller, I feel it should be given to them.
Yeah. And this was almost a question, because you probably see more. I'm wondering, because I heard some really cool ones. Like,
I mean, if it's a real legit, I mean, obviously it's got to be legit. It's got to be real. The only other thing too that I would say not to do is do not include pictures.
Oh, wow.
Don't include pictures.
Why is that?
Because it can get really sticky here. And I'm going to tell you why is if somebody doesn't get picked and there was a picture with it and there was a certain culture or certain whatever in that picture, it could be deemed that they weren't picked because of the picture. Okay.
Makes
So
sense,
you
but
just got to
where
be
we are in
careful.
this
We have to
world.
be careful in where we are in this world. I mean, you know,
Jeez.
What if I don't wear my sombrero in the picture?
see, he can say that. We're not allowed to say that. No, I'm kidding. No, you're right. But that's the thing. That's exactly the point there, Hugo, is, you know, we're in a world today that obviously sometimes you can't show who you really are because they're afraid they're going to be discriminated against or whatever.
So what's the craziest thing? Not craziest, but what's the coolest thing you've heard?
Well,
'Cause I heard of like buying trucks, moving trucks. Like, is all that?
well, you know, it's
legal?
interesting. Yeah. Oh, absolutely. Yeah. You can in the offer itself. I mean, we've heard, you know, all kinds of stuff. Watching the dog while they're moving their furniture. I mean, there's all kinds of things you can come up with. I mean, and be creative.
Airplane
Winning.
tickets.
Yeah. Oh, you can do anything you want.
trips to
The
what?
only thing you got to watch is obviously, you know, we're all signing at settlement that there was no
Wow.
other consideration that wasn't on the agreement of sale. If it's on the agreement of sale that there's flight tickets coming with this, obviously the appraiser is going to have a problem with that. Okay. But you have to be careful. I think we all have to be careful because we have to watch what we're doing. Everything has to be legal. Everything has to follow the bank guidelines and all those things there. So, but you know, you can still be creative.
So
I mean,
a moving truck would not qualify as giving money?
I don't think so. I think a moving truck would be, you could just say it's a gift. There's no money involved there. It's a gift. You know, we're going to allow you to use this moving truck or whatever. So a lot of realtors use moving trucks, and you know, Susan has the big dumpster that she does for free with any of her clients.
Yeah, no, that's a good idea.
So there's a lot of things you can do that way. But yeah, it's how to win an offer has gotten more and more challenging. But let's go to the reality of where I think things are starting to go. I think because rates, Justin, of the little climb in rates, I think what I'm starting to see is a little bit less, just a tiny little less of buyers out there. I think we lost some buyers. I know I lost a couple buyers in the market, and I think we have lost some.
When you say lost, I don't think we lost. I think
they're backing out.
Yeah,
they're saying, you know what? There's a couple of reasons why they're saying, you know what, is one is they put 4 or 5 offers and didn't get it. And now on top of that, they're like, okay, now I haven't gotten a house in 4 or 5 offers, and my rate went up by 2 points.
Yeah. So not only I'm overpaying for the house, and so you're
overpaying in both places.
Yeah.
On your interest rate and on, because before it was acceptable and understand, and people could swallow that and go, okay, I'm paying more for the house, but I've got a great rate over the next 30 years.
Yeah.
So I think that's some of the things that have gone on. So what are the things that you're seeing?
Well, so the one thing we're doing is, and that's where I have a slide for, we have a secure buyer. So this is, this is something that's good for you when you're presenting an offer. So what I like to do for my buyers once I get them is I want to get them not only a pre-approval, but I want to get them an actual commitment.
Right.
So we're going to bring you in and we're going to get everything up front, and we're going to get a dollar amount not
Right.
just an address that we're
Yeah, sure.
approving you for. So we're going to get a dollar amount, and we're going to put you through a program called our Secure Buyer. So now,
Now you're actually taking them through underwriting?
yeah, it's a little bit more expensive on our end, obviously, because we have to do all the work without knowing that the
Whether it's
client's
gonna
gonna
work.
get a house.
Right.
But it's worth it because if we can get a commitment, and now we're almost like a cash deal.
Right. Got it.
So you can submit your offer and say, "Hey, we're ready to roll as soon as we have an appraisal." and
So
title."
basically you're and in that commitment letter, that letter you give as the pre-approval or
Mhm.
approval basically states really we're waiting for an appraisal
Yep. Appraisal and title. Mhm.
because everything else has pretty much been
Done.
done. And that to me is very valuable because one of the things that we have seen in the past and seen through this market is there are some lenders that will basically do a little interview over the phone. Okay. They pull
Oh,
the
yeah.
credit, never checked on income, never checked on employment verifications at all. Didn't check anything. It just went by, and obviously 90% of the time or more, the buyer's telling the truth and it's all good.
Yeah, but I've gotten those calls from
Oh, yeah.
agents that say, "Oh, you checked the pay stubs and we."
Yeah.
Yeah.
Yeah, that's kind of what
Yeah,
we're
it's
supposed to
kinda
do.
what-
Yeah.
yeah.
It's called trust but verify, right? That's
Ronald
what it's
Reagan.
called. Trust but verify. Yeah. So, that's a great program. And what's it called again? What's that program?
Secured Buyer.
Secured Buyer. Awesome. You had some other graphs that we wanted to show, and for the podcast, I'll explain to you what we have. What were the other graphs you had? You want to show us the bond
Yeah, I
market, I
wanna
think,
show-
and how that
yeah.
correlates with interest rate, right?
Correct. Yeah, 10-year treasury. I just took a couple snapshots. Just this is the 1 month that you're looking at.
Okay, and that's the 10-year treasury bond, right?
Correct. So is this going to be point for point what the interest rates are? Drive off of? No,
But it's
this is
close.
one of the factors.
Right.
So typically, what I tell people is it's about 3% above where
Okay.
we're at. So that would put us at 5.817, which is about right.
Okay.
Give or take. So you can see right there. I know it looks like big drops. So this is 1 month. So it looks like back, 25th last month, it was the lowest. And that lowest was 2.775. So the difference is not even that much. You're
Right,
talking about
right,
less than
exactly.
8. And then I think Hugo, I did the year. Did I do a year?
I think you did a year and you did a 5-year.
5 years.
Yeah,
Okay,
yeah.
so this is cool. So you can see 5 years ago we were about the same.
So 5
but-
years ago we were at what? 2.8120,
Yeah,
right?
so we were probably at about 5.5, 5.25.
Okay.
And then you see, back in 19, we were even higher.
Yeah, 2019. It looks like the bond market was way higher.
So, and again, then it came all the way down in less
Yep.
than 2 years. So,
Yep.
I mean,
So but that's kind of what it follows, right? I mean,
Correct,
it definitely
yeah.
has a lot to do with the interest rate, right?
yeah, when somebody's calling me up and asking me what the rates are today, before I pull up my actual rate sheet,
Yep.
I go to CNBC and just pull up those graphs.
Right.
And I see what so I'll know that if it's down, if there's a red arrow, it's probably a little good. If there's a green arrow up, it's, we're
right.
worse than yesterday.
Gotcha. Interesting. So
Mhm.
yeah, that's what follows. And that just goes back to everybody thinking that it follows the Fed rate, which it doesn't.
Right. So
Yeah.
when the Fed raises the interest rates, I mean, it's going to affect it.
Yeah, sure.
Obviously, but that's more your HELOCs and HELOCs.
Yeah. Yeah, there you go. And the hemlocks too. The hemlocks are in there too. So that's cool. That's good stuff. Anything else you can think of? Any advice or anything that we have going on that you would want to talk about? That you're seeing in the market? I mean, I'm seeing a little uptick today. We had 301 homes on the market when I checked, which is, it's looking good. We were at 280 or something last week.
270. 270s was where it was hovering. No, just don't give up hope. I mean, just
Don't give up hope. That's a good one. That's a
Yeah.
good one.
keep the
And
dream alive.
Keep the faith.
Keep on trucking.
Keep on trucking. Keep the faith alive. Right? Is there anything else we can say positive? Come on, Hugo. Do you
Yeah.
have one?
Come on,
You have anything
huge.
positive to say about the market? No.
I'm excited to buy a home this year.
Oh,
Yeah,
you're
me
excited
too.
about home. There we go.
Me
The
too.
American dream, right? American dream. Thank you so much, Justin. I appreciate you coming in here. We'll have you back in several weeks. We got all kinds of people coming in, and I am still working on getting the president of Keller Williams to be on this show.
Wow.
He's agreed to do it. I just got to work out a date. So be looking for that one. It's going to be a good one. All right. We'll see you later. Cool. We're live here. Yeah, I'll just end this.